Today we want to talk about asset management, and when we talk about asset management, we want to look at your aircraft as an asset in the portfolio. And by the way, let's be very clear right up front what our goal is here. It's to save you money. An aircraft is not a typical investment vehicle in an asset in a portfolio. It doesn't make any money, so all we can do by managing the asset the best we can is to save money. So we're here to save money. And since these airplanes are so expensive, we're here to save you millions of dollars. Okay? So any asset in the portfolio, we want to have a plan, right? Since we're talking about airplanes, we're going to call that a fleet plan. When I say fleet, I could mean 1 airplane, 5 airplanes, 10 airplanes. The principles apply regardless of how many aircraft we're discussing. But we're going to look at a fleet plan from 3 perspectives: the company, the condition of the company, its strategic vision for the use of airplanes, how they feel about airplanes, the marketplace, not just the macroeconomic marketplace, but the aircraft marketplace specific to your model, and where we see that market going in the foreseeable future, because that's what's really important, the trends and what we're seeing in the next 12, 24 months. And then, of course, the airplane. That's the third lens we'll look at. So the company, the marketplace, and the airplane. So if we have a plan and we've executed, or we created a plan, we go execute the plan. Now that's the foundation for managing the asset once it's in play. So when we monitor the plan that we've created and we look at the asset. Again, we're gonna review the plan on a several basis, but when we review it, we're going to look at the same 3 things: the condition of the company, the marketplace, and the airplane. We like to do a couple of kinds of reviews. One is a fixed interval, so a quarterly statement, an annual review, and then the second kind of review would be opportunity driven. Something happened in the marketplace or from a vendor supplying aircraft or within our own company that says, hey, let's go recalculate and see if we want to look at the plan in a different light because of an opportunity-driven timing piece. So now we're reviewing the plan, and when we review a plan, there's essentially 4 things that we're going to do. The first thing we're going to do is say, stay the course. The plan's working. This is exactly where we thought we'd be, and so let's just continue on as we went. The second thing we'll do besides stay the course is accelerate the plan. We may want to move assets in and out of the portfolio at a faster or a turn than we had because of an opportunity, again, in the market or the company. The third thing we do from stay the course or accelerate the plan is slow the plan down. Maybe the timing in the market or the company, etc., says, hey, this isn't the right time to do this, so let's slow the plan down and replace the asset at a different time, or keep the asset longer in our portfolio. Okay. By the way, let's talk a little bit about that timing to speed up or slow down. We think that one of the fundamentals of aircraft finances is the capital issues, what we pay to buy them, and the residual value tends to dwarf what happens in the middle. The operating costs are fairly predictable and will stay in a relatively narrow band, where the acquisition price and the residual value can fluctuate greatly. Remember your old economics class where they talked about the elasticity of price with supply and demand? Airplanes are very elastic. So in 2008 to 2009, we saw aircraft values plummet, fair market values plummet from between 40 and 50% of what they were worth in 2008 till the end of 2009. So that's why we want you thinking very carefully about the timing of your replacements and when the right time to buy and when the right time to sell is, because that's where the millions of dollars can get saved. Okay, so we've talked about in the asset management process, stay the course, speed up, slow down, and of course there's always a 4th option, and that's change the plan. Something's changed in our mission, in our company, so we need a different type of aircraft than when we created the plan. So those are the 4 components of managing the asset. And again, let's be very clear, just the way we started, that the whole reason we want to manage the asset in the portfolio as smartly as we can is to save money. That's the idea behind asset management. That's what we're trying to accomplish here at Guardian Jet. We'd love you to give us a call and talk about this in more detail and see if we can't save you a lot of money. Thanks.